What is the difference between being prepared very well and getting overwhelmed? I'm sharing something with you since maybe you have no idea about what happens behind the scenes here at Studio Rigo. As you know, I really enjoy talking to prospects and people and clients from all over the world. Not so often when the meeting online with a client is over. I like to speak about what just I heard from him with my teammates. It's a very cool way to share my experience and most of all hear a different opinion from my teammates. Just last Friday, I spoke with a very nice woman from Japan, committed to move to Italy in 2028 or 2029 at most. As you can tell, we're definitely addressing something that requires some years to become real and true, right? Well, this lovely lady started a conversation with a very open-ended question like, how can I structure my business and my finances the best way for Italy? You know what I said? I have no idea, with a big smile on my face. Italy works on a different rules, tax rates, incentives, and deadlines every year. So preparing years and years in advance is like wearing the same clothes you used to when you were a kid. Those just don't fit you anymore, and they will never do it again. It's okay to get an estimate of the possible tax rate you're gonna deal with once that you become a tax resident. It's fine to understand, roughly speaking, how your assets could lead liabilities in Italy for the wealth tax purposes, for example. Learning how the cash business principle works in Italy could take some or several big capital gains out of the Italian tax return, saving the so-hated 26% flat tax. Reducing the number of bank accounts you own is possibly a smart move, but if you translate this decision into numbers, you're saving, let's say, 34 euros times the accounts closed. Is it worth it or not? I'll let you decide. Some regulations more likely will never change, such as the taxable sources of income, the foreign assets to pay taxes in Italy on, the special clauses that are provided in the dual taxation agreement between your country of origin and Italy. Beyond this, I would recommend becoming more suspicious and learn how to stay away from tempting conclusions and calculations. When you hear about nice tax incentives, such as the 5% for new businesses, as known as regime forfettario, the 7% for people retired from work, or the 50% discount for 5 years as regime impatriati, those are special welcome gifts for those willing to move to Italy in the short time, very short time, like December 31st of that given year, more likely by the end of December of the fiscal year. And in many of those, I should say all of them, work in a very strange way. The benefit is given in the year in which you become a tax resident. So, following this statement, moving the second half of the calendar year could possibly kick you out of the plane. There is nothing much you can do before moving to Italy. Maybe one thing is worth a try. Learn and wait. Take care about the immigration process. Learn how to manage your finances remotely. Understand how and when you're allowed to work remotely for your employer or for your own business. Ask your accountant what happens in the other country if you earn money while living in Italy. Make sure you're not going to have to pay double taxes because your home country signed a very weird tax agreement with Italy. Preparing is understanding what the basic rules are, what the big picture is, and what are the limits provided by the law. Planning is the ability to narrow until you find the perfect solution in terms of timing, liability, percentages, obligations, and peace of mind. You can hire 100 Italian tax professionals. You can ask them to work on 100 different tax estimates with a 5 to 10 years time frame. I bet even the best of them could fail on his work. Why? You may need a fortune teller, not a tax advisor.